Hello, greetings, and welcome to Dividend Blasters. This is our 33rd video. Topic today, buy Altria. It's a great dividend yield and an attractive price-earnings ratio investment. Before I start, I will say this. Some folks may find this to be a controversial investment. However, it is an investment. And it's your money. And if you choose to invest in a tobacco stock, that is your choice. You are exercising your free will. If you don't, then you don't. Simple as that. But this is a very successful company that pays a very healthy dividend yield, and that's why I'm covering it. So I'm going. Quick disclaimer, I am not your financial advisor. The purpose of the video is for information and education. It reflects my own personal opinions and my experience. So please do your own research, do your own due diligence, and consult a financial advisor prior to making any major financial investment decisions. Having said that, I've been an independent investor for more than 30 years. However, I do employ my own investment advisor, and before I make a major decision, I like to pick up the phone and call them, bounce the idea off them, see what they think. Sometimes we agree, sometimes we don't. In the end, I make the call because it's my decision. So Altria, through its subsidiaries, manufactures and sells smokable and oral tobacco products in the United States. They sell cigarettes primarily through Marlboro, cigars and pipe tobacco under Black and Mild, moist, smokeless tobacco products under Copenhagen, Skoal, Red Seal, and Husky brands, and they sell oral nicotine pouches. They sell their tobacco products primarily to wholesalers, including distributors, large retail organizations such as chain stores. They were founded in 1822 and they're headquartered in Richmond, Virginia. I will say this, it's well known that this is not a healthy habit. Sometimes folks call it a sin stock, but it is part of our world, part of our reality. The number of smokers has been declining over a number of years because, listen, it's just not a healthy habit. However, some people can't stop, and some people don't want to stop. Now, Altria does do some things to, quote, move beyond smoking. They have oral tobacco products like smokeless tobacco, and I mentioned the nicotine pouches. They're getting into something called e-vapor. They have heated tobacco pouches. They also offer something called support cessation, meaning how to quit. If you want to quit and you can't quit, they offer a free resource called Quit Assist. It's an online resource to help adults successfully quit tobacco. And its website is quitassist.com. So let's get to the investment numbers. Altria Group is ticker symbol MO. It has last traded today, Friday, May 19th, at $45.30. That's what it closed at. Earnings per share, $5.05. PE ratio is 8.93. Now, the PE ratio is low compared to the S&P 500, which is around 22. It's about in the middle in its sector, and I'm going to get to that later as I look at some of the peers that they compete with. What I like about Altria is the dividend rate is $3.76 a share. They actually just declared another quarterly dividend at 94 cents, so they're maintaining that for the year. The yield comes out to about 8.34%. They have a market cap of over $80 billion. So here's just some summary dividend yield metrics. As I mentioned, they're 8.34% yield. The payout ratio is a little bit high for me. I typically do not like to go over 60%. However, they have been increasing their dividend for 53 consecutive years. They are a dividend king. You cannot ignore them. I do like the growth rate. It's over 7%. Now, this is actually something that's unique, where you see a dividend yield that high and also has a dividend growth rate almost as high. So 8.34% yield, 7.15% 5-year cagr. That's putting you at about 15.5%. And we've talked about the hurdle that I like to see. A lot of us dividend investors like to see exceed 10%. Typically, I like to see a 3% yield, and I like to see at least a 7% growth rate. They're clearing that, and they clear it primarily through the yield, and the growth rate is just there, okay. And so they're clearing that hurdle by 5%. You look and you got some details here. You can actually see the yield, the forward yield, and you can also see the trending 12-month yield, and they compare very favorably against the sector. The sector is 2.47%. Their trending 12-month yield is 8.25%. The forward yield is 8.34%. They're killing the sector. Let's see. What else do we want to show you? I do like the yield on cost at 6.7% for 5 years. For 3 years, it's 9.89%. That tells me that dividend is increasing at an increasing rate. Let's go to the next slide. So we have some key dividend growth metrics. I did mention the cagr. I like to look at the 5-year cagr. Now, Seeking Alpha, they have this rating system. This is a little confusing to me. They give it a growth grade of A+. So this is compared to all investments out there. That's a confusing thing. When you look at the sector, it gives them grades of C's. So, I'm not sure why. I think that it doesn't quite look right to me, because look at the 5-year cagr. It's over 7%. The 10-year cagr is almost 8%. They're clearly head and shoulders above their sector median, unless there's a couple of outliers there. So there may be an outlier that is well above 8%. We're going to take a look at that. Sometimes the numbers are a little bit funny. All right, let's go to the next one. So this, to me, puts them way, way, way above everyone else. Look at the consecutive years of dividend growth. And I mentioned this, 53 consecutive years. 53 consecutive years, the Altria Group has been increasing their dividend. They are a dividend king. Look at the sector median, okay, 2 years, okay? And then look, consecutive years of just making dividend payments, 13 years. Well, Altria kills them both. They're blowing them away. Here's some of the peers you should know about. British American Tobacco, Japan Tobacco, Imperial Brands, Philip Morris. So they used to be part of Philip Morris. Philip Morris is now international. Altria is domestic. And then there's RLX Technologies. So what stands out for me is that Altria is much smaller, people-wise. They only have 6,300 people. British American Tobacco over 50,000, Japan Tobacco over 50,000, Imperial Brands almost 26,000, Philip Morris International almost 80,000. RLX Tobacco, that's much smaller. I'm not as familiar with them, but Altria is, people-wise, is a small company. But look at their enterprise value, $102 billion. They're smaller than British American Tobacco by about $28 billion. Okay, so they're about 80% the size, enterprise value, but maybe 1/9 the size people-wise. Japan Tobacco, they dwarf them. Imperial Brands, they dwarf them enterprise value. Philip Morris International is bigger, almost twice the size enterprise value. But you know what? They got like 12 times the number of people. I think that's fascinating. Look at the market cap, 80 billion, okay? The same size as British American Tobacco, double Japan Tobacco, uh, 4 times the size of Imperial Brands. It's maybe about 60% the size of Philip Morris. So Philip Morris is really the number one big uh, tobacco company. Altria is probably number 2 in size. All right. Um, all right. So let's see. That should give you some context of their peers and the size. I mean, I think to me, the major takeaway is that Altria is a big company with much fewer staff. So that should say something to you. So this is interesting. Now, what I'm doing in the next couple of slides is I'm going to show you, and I'm getting all of these resources from Seeking Alpha, and I subscribe to Seeking Alpha. It's a wonderful resource. But I'm showing you the difference, Altria, how they perform against their peers. And I'm looking at just price return, and then I'm looking at total return. What's the difference? Well, total return is price return plus dividends. So the orange line in both graphs, and this is for 10 years, is Altria. And Altria is performing better on a price basis against its peers. So for the last 10 years, they've returned about 22%. And most of the others have basically been huddling at 0% or less. There's a lot of negative price return companies there. Let's look at total return. Total return, Altria is over 117%. And then you have British American Tobacco, a little under 2%. Japan Tobacco, they're negative, as is Imperial. And Philip Morris is at 63%, so much less than Altria. That should tell you something, okay? You know, the price appreciation is not nearly as good, and the dividends are not as good. And I'm looking at Philip Morris International because they're probably the closest competitor, in my judgment. Let's go to the next one. Now, what is this and how is this different? This is more than 10 years. This is above and beyond 10 years. This goes back into the 1990s at least. Altria's price return is almost 900%. Nobody else is anywhere near that. British American Tobacco, 152%. Imperial, 99%. Japan, minus 32%. Philip Morris International, 81%. So that's just the price return. Now, you know, when you look at the total return, Altria really separates themselves from the crowd. Look at this. This is absolutely amazing. The total return of Altria max is almost 5,000%. The next closest one is British American Tobacco at 821%. Japan Tobacco, minus 30%. They just cannot get out of negative territory. Imperial, not bad, 307%. Philip Morris International, 271%. The last two are not bad, but I'd much rather have a 5,000% total return on my investment over the long haul. Dividends. So here we're looking at how they compare to their peers. So what I do is I like to look at the forward ratio, if you will. Altria is at 8.34%. British American Tobacco, it's a little bit more. It's 8.5%. But the rest of them are below. Let's look at the trending 12-month rate, if you will. They, being Altria, is at 8.25%, and all the rest of them are below. British American is close at 8.15%, but the rest are in the 7%, 6%, and 5%. Now, the rate, as I've mentioned, is $3.76. So every share of Altria you have, you're going to get an annualized rate, and it's a quarterly dividend. So you're going to get 1/4 of that each quarter, but that's going to come out to about $3.76 this year. And if past performance is a predictor, they will increase the dividend, and they will increase it by probably 7.18% or something like that. And I'm looking at the CAGRs. The 3-year CAGR is 3.86%. The 5-year CAGR is 7.18%. So take a look at British American Tobacco. In both cases, they're killing them. The British American Tobacco is less than 1% for 3 years and negative for 5 years. So that shows me that they actually reduced their dividend one of those years. And I haven't researched it, but I can tell by that metric that that's what that means. The Japan Tobacco Company, their 3-year CAGR is 24.38%. But the 5-year is 1.54%. So, that to me tells me, well, their dividend growth is trending in the right direction, but they've had a fairly low dividend growth rate over the past 5 years. Imperial, negative, and Philip Morris, 2.86 and 3.55. So again, Altria wins here with dividend growth rate. They're killing it as far as duration or number of years of consecutive growth. You can see that on the second to bottom line. The only one that comes close is Philip Morris International, and it's not even that close, 14 years. The others are 0 and 1 years. They're all quarterly, except for Japan. That's a semi-annual payout. Again, I wouldn't even bother with that. Let's move to the next slide. Price earnings versus their peers. So, the S&P 500's PE ratio is around 22 the last time I checked. The companies in this industry have a lower PE ratio. Okay, so their price of their investment is less relative to their earnings compared to the overall market. So let's take a look at PE. Which one do we want to look at? So they give you a whole bunch of different ones. Let's look at PE gap forward. They're at 9.14. They're a little bit more than British American Tobacco. Look at the Japan Tobacco Company, over 1,200. Philip Morris is at 15. RLX is 24. So, I would say Altria is probably the best on a PE basis, a forward basis, even though BTI is a little bit less. You got to look at this metric in relationship with the rest of them. You can't just use one. And I'm looking at the dividend metrics that I just talked about, and that to me weighs in favor of Altria. So let's see. There's not enough data to do a PE non-GAAP TTM. PE GAAP TTM, well, it comes out higher than BTI. Comes out a little bit higher than Japan Tobacco, a little bit higher than Imperial. Not much, less than Philip Morris. When I see these things, it kind of leads me to believe it's a little inconclusive. You got to keep looking. You got to keep digging. Let's look at some more of these. So let's look at growth. Revenue growth year over year. Well, they're at 10%, and BTI is 7.67%. Well, Japan Tobacco, 16%. Imperial, 7%. Philip Morris, 1.5%. And forget RLX. Let's take a look at the 5-year CAGR for revenue. Well, revenue is low. It's 1%. BTI is over 7%. Japan is over 5%. Imperial's 3%. Philip Morris is 1.6%. So, on the 5-year compounded annual growth of revenue, Altria comes out last and we don't know anything about RLX. So, but I will say this. Now, I own shares. I own quite a few shares of Altria. You're not going to buy it for price appreciation. You're going to buy it for the dividend. So they're maintaining that dividend, and they're actually increasing it. So I don't see the revenue here based on this metric increasing a lot, and people are actually starting to pull away from tobacco products. So to me, this is a little bit to be expected. You're not going to see high growth in this industry. You're going to see steady, slow growth. And again, you would invest in something like Altria for the dividend. And if you're dripping, you can grow your holdings and continue at some point to get a nice dividend income when you start to draw down when you retire. Something to think about. Now, I'm not going to go through each and every one of these. You can freeze the screen and go through them. But really, Altria does compare fairly favorably in a lot of these metrics. Let's look at, we did growth. Let's look at some of the profit metrics. Well, gross profit margin almost 69%. Well, British American Tobacco is almost 83. But look at the others. They're all underneath, well underneath. Japan Tobacco 59%, Imperial 36. Philip Morris, it's in the ballpark, a little under 64. And let's see, EBIT, which is earnings before income tax, 59.7%. Head and shoulders above everyone else. And then EBITDA, earnings before income tax, depreciation, amortization, almost 61%, head and shoulders above everyone else. Net income margin, 27.1%. Well, the only one that's really close and actually exceeds it is Philip Morris International, 27.2. But they beat British American Tobacco by 3 points. They kill Japan Tobacco. They kill Imperial. They kill RLX. Let's see. I like the return on assets is over 23%. Philip Morris International is close, 22%. Return on total capital, they come out on top there at 32%. And they beat Philip Morris International, which is the second one, and they're at 24%. Cash from operations. This, to me, I think is really important because cash flow, especially cash flow from operations, is the lifeblood of a company. Their cash flow is $8.17 billion. Now, British American Tobacco, a much bigger company, $12.5 billion. All right. But look at Philip Morris International. That's a much bigger company, too. And they're just at $8.7 billion. Not much more. Revenue per employee. Now, this is where they're going to stand out because they are a much smaller company, people-wise. 3.28 million per person. Okay, look at all the rest of these. All the rest of these are in the 300,000, 400,000, 700,000 range. RLX is 1.08 million. So Altria comes out on top. Net income per employee, you can do the math. They are 7, 8, 10 times the size in that metric as everyone else. Let's go to the next one. Risk. Well, what you're going to see here are low betas. These firms are less volatile price-wise compared to the S&P 500. If you look at the beta, and again, this is a comparison with the S&P 500. For the last 24 months, Altria has been at 0.41. Okay, so 41% of the volatility of the S&P 500. So these are very price-stable stocks. The last 60 months, 0.63. So it's become even less volatile over the last 2 years. How do they compare to their peers? Well, BTI and Japan are less volatile, as is Imperial. Philip Morris, a little more volatile. RLX, more volatile. But again, compared to the market, these are very stable stocks price-wise. Income statement. Well, let's see. They are making over 20.6 billion in revenue. And they're right there with just about everyone, except British American Tobacco is 33 billion and Philip Morris International is 32 billion. Remember, they got those are much bigger companies, but they're about only 33% more revenue. Revenue per share, well, I think that Altria probably has more shares out there trading, so their revenue per share is going to be a little less. Let's see, net income. Net income, they're in that same ballpark, 5.6 billion. Philip Morris is 8.71 billion. They're more than Japan at 3.5 billion. They're close to the others. Operating income 12.3 billion. Not bad. Their operating income is more than Philip Morris International, which is 11.9 billion. I think that says something. The only one that is above them, that beats them, is British American Tobacco at 14.1 billion. Cash flow. Okay, I did talk about cash flow a couple of slides ago. So 8.17 billion for Altria, and Philip Morris is only 8.73 billion. British Tobacco 12.56 billion. Much larger companies. This is a decent figure for the size of the company. And folks, that is all I have. I hope you found this to be informative and educational. These are my opinions, and it's based on my research and my experience. So if you found it useful, if you found it helpful, give us a like and subscribe to our channel. And feel free to share with a friend or a family member. Until our next video, have a great day and God bless.